Distinguished guests, ladies and gentlemen, first of all, I'm delighted to be here in Gaziantep. Gaziantep has a special place, of course, in my life because I was a member of parliament for 3 terms from this beautiful province. So it's great to be back. I'm sorry I was unable to join you at the opening early this morning because I had to go to Istanbul for a last-minute meeting with Prime Minister of Malaysia. And I'm going to stay here briefly because I'm on my way actually to Abu Dhabi. So apologies for disrupting your program, but it's so great to see Gaziantep hosting such a great international event. It's a great delight to have you here. And once again, as a former member of parliament from this town, a warm welcome to you all. I do actually have a presentation because usually they say, you know, a picture is worth 1,000 words. And therefore, considering that we have limited time, I'll go straight to my presentation. It's a little bit about global backdrop and then Turkey's new program and, of course, a case why people should consider investing in Turkey. On the global backdrop, clearly we're going through a difficult period. Simply, global growth is subdued. We have mediocre growth. Next year, global growth is going to be around 2.9% according to the IMF. But of course, growth in our trading partners, in particular in Eurozone, is going to be sub 1%. So risk appetite is not there. Growth is slow, and there are significant headwinds. Global financial conditions are pretty tight. How could you compete against a risk-free rate of nearly 5%? I mean, US 10 years are at 5%, so it's hard to compete. It's hard to lure, resources into emerging markets in particular. Energy prices is the wild card. It has picked up. Let's hope that the war, the current conflict in the region stays contained and gets resolved quickly. No country can build peace and prosperity on the basis of conflict and wars. Even if wars are won, unfortunately, you cannot ensure peace, stability, and prosperity. So I think the only way forward for this region and out of the Israeli-Palestinian conflict is a lasting peace, obviously on the basis of a 2-state solution. So hopefully that doesn't get escalated beyond current human tragedy and energy prices stay where it is. Of course, strong US dollar is also a headwind for emerging markets, in particular for countries like Turkey, where we buy raw materials in US dollars and sell finished goods mostly in euros. When it comes to Turkey, of course, we have plenty of challenges, but we also have a program that is catered to address these challenges. Our top priority is price stability. Here, of course, inflation is high, but we have a program to disinflate. So we see inflation going back down, to single digits by the end of 2026. And how do we do that? Well, if I can get this to work, it stopped functioning. We obviously are going to implement conventional monetary policy. If someone can look after this one, please. So we're doing conventional monetary tightening, but we're also doing quantitative tightening, as well as, it's working, yes, selective credit tightening. So the monetary policy stance is actually pretty strong. It's an ongoing business. So the commitment is to anchor inflation expectations, and through that, rebalance the economy, moderating domestic demand while obviously supporting exports and investments. And through that, a narrower current account deficit, a relatively more stable lira, and that environment will foster speedier disinflation. So that's really roughly how the program works. We hope so. We're also restoring fiscal health. Historically, Turkey has had strong fiscal record, sound fiscal policies, but this year is reflecting, the larger deficit reflects a combination of earthquake and mainly earthquake. Once the impact of the earthquake peters out, we expect deficit to be sub 3%, and a sub 3% deficit will imply a stable debt to GDP ratio in low 30s. Turkey can live with an earthquake shock simply because Turkey's debt to GDP ratio is modest by emerging market standards. Global emerging markets have an average debt to GDP ratio of 67%, while Turkey has a debt to GDP ratio of around 33%. So even if there's a temporary increase, we can live with that, but certainly we would like to continue to have a fiscal anchor. And to go back to fiscal anchor, we would like to bring the deficit on a lasting basis to less than 3% of GDP in line with Maastricht criteria. If you look at Turkey's economy, clearly it's not a highly leveraged economy. It's not. So our total debt to GDP ratio is 126% compared to 254% in emerging markets and 336% in mature economies. That includes, of course, government, household, financial, and non-financial corporate debt. Rebalancing growth. Turkey historically has strong growth, but we would like to rebalance it. What do I mean by that? If you look at the last century, average real GDP growth rate has been close to 5%. This is quite an impressive performance. If you look at last 20 years, growth has averaged to nearly 5.5%. So for the next few years, growth is going to be somewhat subdued, but still strong. We would like to change the composition of growth, and our priority is exports, clearly, while domestic demand moderates. And that's really the story. I don't have time, don't want to go into details, but we would like to move away from export being a net drag and exports adding, a bit of impetus to growth. Another target of our program is to narrow current account deficit and rebuild international reserves. Deficit is around 4% of GDP, but that includes significant gold imports on the back of negative real interest rate policy of the past. We think gold demand is going to moderate. So current account deficit to GDP is likely to go sub 3% and non-gold deficit less than 2%. If that is the case, it will be covered by FDI inflows to a large extent. So non-debt generating FDI inflows look set to cover much of Turkey's current account deficit. This will enable us to continue to build reserves and buffers. Tourism is a big sector in Turkey. We're number 4th in the world in terms of tourist arrivals. This year, we expect around $56 billion of revenues. We've had a great year, and we think that by 2028, we should be in the top 3 with about 100 million tourists. Another factor why current account deficit is likely to narrow on a more lasting basis is because Turkey has discovered significant natural gas reserves in Black Sea and production has begun. Similarly, we've also discovered oil in the southeast part of Turkey. So over the next few years, up to 20-25% of Turkey's oil and gas needs could be covered through domestic generation, production. This is important because, just to give you a perspective, last year Turkey paid $97 billion to imports of oil and gas and derivatives. So clearly, any progress in domestic production will make a huge difference, and that's another reason. The program has international support too. This is just a couple of examples. World Bank has more than doubled its 3-year commitment to the program of $35 billion US. There's also bilateral support. One of the largest one is UAE. They have committed to invest about $51 billion US. Reserves, we've started rebuilding reserves. Turkey's gross reserves, international reserves, are up by $26 billion US. We think reserve accumulation will continue. This will enable us to exit from the so-called protected lira deposit scheme. We have also, as a third pillar of the program, a structural reform agenda. There's a bit of alignment here, but anyway, we have a number of key reform agendas. One of them is enhancing human capital and labor market flexibility. Clearly here, we would like to boost employment, but to do that, we are reskilling and upskilling people. There are active labor market policies. We're also going to implement productivity enhancing reforms. That's the only way forward, because we want to, increase prosperity, not just through additional inputs, but in a more productive way, and that's really the key. So boosting productivity, improving investment climate is going to remain the cornerstone of the program. Again, we would like to boost private savings and deepen capital markets. There's also public finance reform, which includes tax reform, as well as green transformation, and digital transformation. Now, Turkey has committed to net zero by 2053, and that's why we are prioritizing renewables. So across the board, all policies are going to be realigned to cater for this target. And digital transformation is also, again, clearly one of the key reform agenda. So how will our program work? Well, a combination of sound policies and structural reforms is going to help recover investor confidence, domestically and internationally. Credibility and confidence is going to generate or going to trigger inflows, and this is going to help us grow, but at the same time disinflate. And so that's really the basics of how the program is going to work. So why should anyone consider investing in Turkey if you have so many challenges and such a difficult global backdrop? Why not elsewhere instead of Turkey? Well, first of all, we are the center of the earth. So that's why we think everybody should be here. But of course, that's just the humor part of it. Turkey enjoys such a great geographic position that is one of the best candidates in the world for friendshoring and nearshoring. We are friends with Europe because we have full customs union and we are integrated in European institutional setup. We are friends with Central Asia because they're Turkic republics. We are friends with MENA region because we have great relations, historic, as well as, economic. So we enjoy great political relations, and we are leveraging that. We're converting that into trade and investments. So that's really one of the reasons why you should be in Turkey, because if you take a 4-hour flight, you can cover $28 trillion of, GDP, as well as 1.3 billion consumers. Turkey is big. Market size matters. If you take working age population, Turkey is bigger than 18 EU members combined. If you take PPP GDP, Turkey's economy is bigger than 16 EU member states combined. I can go on and tell you about all these numbers in the table, but clearly Turkey is big, is one of the largest emerging markets, and therefore it makes sense to be here if you're going to cater for the consumers of this country. Let me ask you a simple question. How many countries can you count that has population over 80 million and a GDP per capita of over $10,000? Not many. There are only 7 countries in the world. 3 of them developed, 3 of them developing, emerging, and 1 of them is Turkey. It's United States, Japan, and Germany that qualify for both conditions. And it's Mexico, China, Russia. And the 7th one is Turkey. So that's really the reason why it makes sense to be in Turkey. But does it pay off? Do you actually get the returns? Well, if it is about top-line growth, if we're talking about sales, well, the proxy is GDP. If you look at the last 20 years, if you say 2002 is equal 100, the dotted line is Turkey's performance. Where the GDP was and where it is right now. We are ahead of global emerging markets slightly. But if you take China and India out from emerging markets, because they're huge, it is the yellow line that is the reference. And if you look at relative to the yellow line, Turkey has outperformed significantly. So in that sense, yes. Certainly, I know there are issues with the past few years of exchange rate depreciation, but that's behind us because our policies today no longer imply such a path. Turkey is at the heart of New Silk Road. Regardless of which trade corridor you're talking about, naturally, if you are the center of the earth, it has to go through you. Our infrastructure also is almost at par with some of developed countries. If you look at here, this is World Bank Logistics Index. We are better than, in terms of logistics, better than 91 emerging and developing economies. So Turkey has invested very heavily in physical infrastructure, in energy, in fiber optics. So when we talk about logistics, we're talking about, a broad, essentially infrastructure platform. So Turkey has also great infrastructure. Just to give you a sense, what happened in 20 years? This was the map of highways, or let's say motorways, dual carriage highways. That's the map in 2003. And here is the map in 2023. This is physical road infrastructure. Such a difference. This is the map of high-speed rail network. We are going to invest about $57 billion between now and 2053 in railway infrastructure. That's our top priority because we want to make Turkey more competitive. And to become more competitive, railway is the way forward. and we've made already significant progress. This is the map of airports. Almost every province has an airport. Turkey's airports over the past 20 years have more than doubled. So clearly, connectivity-wise, Turkey is in great shape. Again, we are improving digital infrastructure and its quality. I'm not going to go into details of these numbers, but just to give you one simple number, the fiber network length was only 9,000 kilometers. Today, it's over 500,000 kilometers. But we're not done. There's still a long way to go. We're still investing heavily. Turkey is a global energy hub. Oil and gas pipelines are, coming from north, from east, from south, all of them through Turkey to Europe, catering for Turkey's needs as well as global needs. So clearly, in that sense, we have a significant advantage. There's also significant progress in energy transition, as I said. Already 55% of our installed capacity is renewables. We would like to boost that to over 70% by 2035. So clearly, we're going to continue to invest in renewables. That's the way forward. Turkey is a global player in construction sector. We are only second to China in engineering news magazines, 250 plus global construction firms list. Turkey is represented by, around 40 companies on that list. So we're only second to China. If you look at the last few decades, Turkey has completed almost $500 billion worth of projects. So clearly, if you're going to get involved in reconstruction of, let's say, Libya or Ukraine or somewhere else, your partner naturally would be a Turkish company. So why should portfolio investors consider investing in Turkey? Well, simple, we're not a crowded trade. Turkey used to account for 10% of global, emerging market debt indices. Today, it accounts for less than 1%. So we think that there is significant upside here. The equity market is likely to re-rate because we are implementing sound policies and we're going to continue to implement structural reforms. So that makes sense. That's the path to re-rating. I know exchange rate has been a concern. This is real effective exchange rate. The blue line is CPI based. The red line is unit labor cost based. Clearly, whichever way you look, we've had quite a painful decade or so. And therefore, with these sound policies, chances are real exchange rate appreciation is going to be the new norm, regardless of the global headwinds. We are also trying to reconnect strongly with our neighborhood as well as EU. Turkey-EU agenda is a positive one. We are focused on upgrading customs union. Cooperation in energy, security, and migration continues. Turkey has been part of European network, let's put it this way, and part of Europe for centuries. Turkey has been a member of Council of Europe since 1949, member of NATO since 1952, an association agreement with EU since 1963, founding member of OECD, and a full customs union with EU since 1995. But we're also trying to diversify, and Africa and Middle East is one of key regions that we are focused. In particular, if you look at it, relative to 2002, this is the share of our exports to this region. We think we can go back to way above 30% again. There was a bit of interruption or disruption following the Arab Spring. We're back on good terms with everyone. So there's a compelling case, again, to use Turkey as a hub, as a center to manage your relations with rest of this region. So whether you're talking about Balkans and Europe, whether you're talking about GCC, whether you're talking about North Africa, whether you're talking about Central Asia, Turkey is the perfect place to be in that sense. THY flies to over 62 destinations. Turkish Airlines flies to almost every country in Africa. It is the leading carrier out of Africa. And we have the 5th largest diplomatic presence in Africa, along with the big ones, the US, China, France, etc. So clearly, we are well positioned, Turkish businessmen would be great partners if you are considering doing business in this broad geography. Now, I think I'm done. I know time was limited. Once again, I hope this gives you at least a little bit of color about where Turkey is and where Turkey is headed. We are committed to achieving macro-financial stability, but also through reforms, enhance productivity, and we're working on a very comprehensive program, as I said at the beginning, and the program will begin to yield significant results. If we are meeting next year this time, won't be telling you what we're doing. I'm going to be telling you about the results, the outcomes. So we are quite confident that the program is working already, of course, but it will deliver the desired results. Once again, I'd like to congratulate Horasis family, the community, for choosing this great city, Gaziantep, which is one of UNESCO's, of course, creative cities in gastronomy. You have to spend at least a year to try every single dish. Yeah. So there you go. I mean, 2 days certainly won't do the trick. So that's why we need to have you back at some point next year. Hopefully, I don't know what the mayor's plans are, but this should be a traditional, gathering, hopefully. Next time, I promise I'll spend more time and I'll sit with you and do roundtable meetings so I can hear you rather than lecture you. But I thought that it would make sense to give you a little bit of, color as to what we're doing and where we had it in such a challenging world. Once again, thank you very much for having me. It's a great honor. Thank you.
Thank you, Mr. Minister, for joining us. Yes, you're free to go, and also giving an insight on the Turkish economy. Ladies and gentlemen, now we'll take a lunch break until 3 o'clock, and then all sessions continue accordingly. Thank you very much. Evet. Vallahi olsun.